What's up, my people? It's your boy Onoskid FX. Today I come to show you insights or great slides on how I actually approach the market before taking trading decision. Okay, so what I mean by that is I'll be running a top-down analysis on this pair. So I'll show you how I mark out my structure starting from higher time frame down to my entry time frame. So you want to watch this video to the end because I'll be showing you tips and entry criteria that is very, very important, especially how to filter noises in the market so that you can make good trading decisions. So if you're new to this channel, don't forget to hit the subscription button and also turn on the notification bell so that once we release content like this, you will get notified. Also, I would like to advise you, if you have not watched my videos on top-down analysis, multi-time frame analysis, because for you to run a top-down analysis on any particular pair, you have to understand the concept of multi-time frame analysis. So the videos are right here. Just come to the page and then search for it. This is top-down analysis on how to, this is just the how you, if you watch this video, you should be able to run top-down analysis on any particular pair, whether synthetic pairs or currency pair. So it's very, very important you go through this video. And also, it's important that you check for multi-time frame analysis, or you can just search for it. Yes, this is the video, multi-time frame analysis. All right. So I expect you to visit the page and pay attention to the necessary video. And you can also set up your chart so that it will be as professional as mine. All right, so having said that, let's just dive into what we have today. In running the top-down analysis, the first thing you want to look at is what is the trend of the market. And for you to determine the trend of the market, you must have the knowledge of what is called market structure. So in understanding market structure, you can figure out the original bias or the direction you think the market is heading to. So looking at this chart, as a day trader, your trend always should not exceed daily time frame and the 4-hour time frame. So obviously I'm going to start from the the daily time frame rather. So when you look at this section of the chart, you can see that the market has been bearish, creating series of lower highs and lower low, 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 all to this point where the market create a sort of chart pattern here, which is kind of inverse head and shoulder. All right. There is also a video on chart patterns and how you can actually trade chart patterns. Okay. This trade right here, or this particular video, talk about the application of this particular video. This is the video where I explain about chart patterns, and this is where I actually make trading decisions using this chart pattern. So it's very important to also go through them. It's important. So the market creates a kind of chart pattern known as inverse head and shoulder here, or probably, let's just say the market shifts structure from being a bearish market to a bullish market as this particular structure was taken out. This particular structure was taken out, and also this particular part of the market was broken. So at this stage, the market has fully switched from being a bearish market to bullish market. So what we have here is what we call break of structure, okay, or chalk. You can call it chalk or break of structure, as the case may be. So after this break of structure, the next thing we see is that the market is creating a kind of pullback. After a pullback, which is known as the higher low, it creates a higher high, a higher low, a higher high, a higher low. And currently, based on expectational order flow, when I say expectational order flow, we are indirectly talking about what we expect the market to do next from what the market is doing. That is just a basic explanation of what expectational order flow. Like, where are you expecting the market to go next? And now, based on what we have said, that the market is creating a series of higher highs, higher low, higher highs, higher low, higher highs, higher low, higher high, and then a higher low. Now we are expecting the market to move to take out this particular high. Okay, we're expecting the market to move to take out this particular high to create a new higher high. Okay, so this is what we expect the market to do. This is what we expect the market to do next, based on what the daily structure is telling us. But having said that, as a trader, you have to be very flexible when taking trading decisions. So you can actually pick out your daily range to be this guy and also this swing low here. Okay, also the swing low here. So this is your daily range. What you want to do now, you want to go to the 4 hour to also check what 4 hour structure is saying. So like I said, you have seen how the 4 hour has been bearish as well. But based on what the daily is telling us, we can see that we are expecting the market to create a kind of higher highs in no time. So, but nevertheless, we have to trade what the market is doing. We have to trade what we are seeing in the market. So now the 4 hour is bearish. We can scale down to, as low as 1 hour time frame to also check what the 1 hour is doing. You can check what the 1 hour is doing. You can see that what we have here is a double. You can see this double button right now. This double button is a kind of reversal signal that tells you that, oh man, the markets might be willing to start buying. Okay, so another thing you want to pay attention to is that there is a 1 hour break of structure to the downside, because when you check the 1 hour, the 1 hour is also in alignment with the 4 hour, which is what's bearish. But at this point, this was a lower low, a lower high, a lower low, and what happened? There is a break of structure to the upside here, which could also be a symbol, which would also be a sign of reversal, that the markets want to continue with the trend of the daily, which is bullish. So there is a break of structure around here. So right now, we can see that the market can do something like this, like this, and then continue, creating structure to the upward direction. So, but nevertheless, from here, we can start marking out our important levels in the market. So this is a good zone. 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 This is a good level. This is also a good level. What I mean by zone or level is point of support and resistance. Okay, irrespective of any strategy you are doing, you can never neglect that support and resistance is the basis at which many strategy is built. Okay, so this is going to be one of my important key level that I will be paying attention to, that the market can pull down to before we expect that push to the upward direction. Okay, so I'll just take this particular level. Let me just make sure that these two levels are intact. This is also a great level that I need to consider, but nevertheless, let me scale down to the 15-minute, which is the entry time frame that I use most especially. Okay, on the 15 minutes, you can see how the market is reacting to those levels that I have chosen. So anything can happen from this particular level. I can also see a key zone here. You can see. So this is also a very good level that I'm saying that the market is reacting to. Okay, so the next place that is very visible to my face right now is around this zone. I don't want to make my block to be too big. I want to make it to be too big. So yes, I have successfully marked out my key level, my support and resistance, as people may call it, supply or demand level. Okay, so That is that about what I am looking out for. So right now, where do I want to make entry from this market? So I can have more than 2 points of entry. Market can react to any of this level. The market can come down to this zone before pushing to the upside, or it can come down to as low as this point before pushing to the upside. So all I just need to do is to be very active, to wait to what the market is going to do before I take any decision. So as a trader, I keep making or laying emphasis on the importance of patience in the market. So you have to be very patient. You don't have to rush after what the market is doing. Allow the market to do its thing, and then you have to react to it accordingly. So my level or expectation right now is to take my entry from this level here. This is one. Then if I see a good retracement from here, this is going to be my first entry level. From here, I can also wait to take another entry level, and this point is going to be my conservative entry. Okay, conservative entry is the safest entry. So if you can be patient enough to wait for it, because there are different types of traders. There are traders who are very aggressive when it comes to making trading decisions. When it comes to making trading decisions, there are traders who are very, very aggressive, and there are some who can exercise patience enough. So I'm just going to target this particular point, as if I'm making an entry from here, I'll be targeting some of this key level as my take profit zone. So this horizontal arrow you're seeing here are what is going to signify my take profit level. Okay. So like I said, it is important that you join the Telegram channel, because this analysis right now, I'm going to send it to the Telegram channel here. So this is the link. This is where you can actually join us on the Telegram channel. So all you need to do is click on the link and you will automatically be added to the group. So from here, if I am swinging this trade, I'll hold it till this level. But I'm a day trader, so I will just have to be, very conservative and be realistic with my goals and targets. So this is TP1, TP2, TP3. And if that is achieved, I'm okay with that. Okay, so where is my short button? Here. Oh, sorry. Long rather. Okay, so this is first entry around this region, targeting this particular level. And my stop loss is just going to be below this particular structure, slightly below structure. That is where my stop loss will be. So also, if I get an entry around here, I will target the same point. Meanwhile, I can take my profit anytime depending on how my target is for the day. And my stop loss is just going to be around here. So the last entry, which I said is conservative, is going to be from this particular level here. Okay, so I'll have my entry here and then target the same point. Okay, and like I said, my stop loss is just slightly going to be below structure. So most of the times, if you are following my signals, you will notice that I will always put an indication of either blue or any color to show that, okay, this is a conservative point of entry, which means nothing is certain in the market, but though whenever I said it's conservative, it means that it is more safer than any other entry. So that's about top-down analysis on volatility 75 index. So if you find this video helpful, make sure you subscribe to the channel, and also don't forget to give us a thumb up. If there is any pair you want me to run analysis on, you can actually drop it on the comment box. Meanwhile, this week I'll be sharing all my setup on currency pairs and volatilities. Okay, so make sure you stay tuned. Guys. We're dropping setup on gold. We're dropping setup on US30, Euro USD, and GBP USD. And all the signal is going to be dropped in the Telegram channel. So make sure you join the group. Okay. So that's about all we have today. I hope you find this video helpful. Don't forget to like and subscribe. God bless you. See you in our next video.